This is year 4 for Takaful Insurance of Africa. And as we stand here today, we are 3 licenses. We operate in 3 licenses. Most people are used to the general insurance license, which was given by the regulatory authority. The model we run is different from the conventional insurance model. It's called a Takaful model. The contract is a contract of risk sharing, not risk transfer. The insurers in the house understand what that means. After that, we add the investment income. We manage the risk fund, we invest it in our case, in Shariah Compliant investments, and the proceeds that result from that investment, we add to the risk fund. What we have there is not IFRS accounting, it's AOFI accounting. The report we have there is more in line with AOFI. AOFI is accounting and auditing of Islamic financial institutions. The equivalence of IFRS, which is responsible for reporting, for managing the auditing and reporting on Islamic financial institutions. That AOFI is not a standard that is still yet recognized by the Kenyan laws. If you look at those numbers and you have 2011 against 2012, we have other top premiums that were done for that year. That is followed by numbers that say taxes and levies. This is statutory deductions, stamp duty, training levy, premium tax, the things that go to government of Kenya. That's followed by, and those are deductions, that's followed by commission paid to sales agents, brokers, agents, and so on. That leaves a number of 153 million for 2011, which is the net premium. Onto that, you add the proportion of the investment income earned during that year. The Takaful model is facing challenges, as are Islamic banks and other institutions, because investment market is still undeveloped. We still do not have in our country the capital market environment. So add that, subtract the claims paid for the year, that number of 30.4 million. And that brings us to section D, which really is the risk fund. Okay? In section D, you can see net premium, which is 92 million, which basically means 60% of all the premiums charged during that year, less the premium charged during that year, less the yellow box. You saw the yellow box, which was the wakala fee for the operator, less the commissions, less the statutory deductions. That's what we call net premium, 92 million. Add the investment income, what that item called the other income. Remove Takaful contribution, that part of the money which went to reinsurers. Remove the insurance claims paid during that year. Okay, that gave us a gross surplus of 26 million. Of that 26 million, we reserved 10.4 million and declared last year, this time, 15.6 million. The reserves, that 10.4, is money that goes into back to the risk fund and is meant to actually grow the risk fund so that we grow a base. Okay, that was our first year. So as far as insurance scheme is concerned, we're not talking about the shareholder equity, the capitalization of the company, which belongs to the shareholders, which are in different accounts. The basis for licensing an insurance company is capital. That capital is not here. We're talking about premium collected that year and what we did with it. Okay, so as far as the beginning of year 2012 was concerned, the risk fund started with 10.4. As far as year 2011 is concerned, the risk fund started with 0. That's how the Takaful model operates. Of course, we have, this company was capitalized to 600 million, so we have a kitty of 600 million, which is meant to be the backbone of the insurance scheme in the event that the risk fund is unable to pay the claims. So we have the equity that was raised to license the company. Okay. Now I can take you through 2012 against that, and I think now we have an idea. So in 2012, we wrote 428 million in total premium. Of that, if you jump to D, net premium was 230. Net premium means total premium, which was 428, less statutory, less commissions, less wakala fee to the operator, equals to total net premium, or risk fund share of the net premium. And on the 230.6 million, add 11.7 million shillings from investment income, remove 42.8 million shillings in Takaful session. Okay. We had claims incurred for the year of 145.8 million, and that led to a gross risk fund profit, or surplus of 54 million shillings, 53.8 million, which is a significant growth on year 2011 as far as the risk fund is concerned. And based on prudential guidelines and on actuarial evaluation of the 53.8 million, we were advised to reserve 42.8 million towards the growth of the risk fund. And for this year, we hereby are declaring 11 million shillings to the customers of 2012. So it might, if you look at year 2011 declaration of 15.6 against the 11 million declaration year 2012, you might say that you are declaring less than you declared in year 1. But of course, a lot of other factors come into play. The scientific analysis by the actuaries, the fact that year 2011 was year 1, therefore had no baggage, the fact that we now have more liabilities, long-term liabilities, the interest in growing the risk fund, all those factors come into play. And an insurance scheme is a risk fund, and the bigger the risk fund, the better. So that's what we are declaring. What that means really is those who qualify will receive checks this month, next month, to the tune of 11 million. So that's our declaration on year 2012. We will be declaring year 2013 next year this time. Overall, Tier Group is on a 5-year strategic plan, 2013-2017. That has a very ambitious regional plan that covers the East African countries, Tanzania, Uganda, where we have licenses waiting from the regulators, Somalia, where we've been licensed already, and Djibouti, where we have expressed interest, and Ethiopia, which is part of our 5-year strategic plan. So this is where we will be by 2017. We will be across those 5 countries plus, of course, Kenya, where we are already operational across composite licensing. In terms of key products during that strategic plan, and as you came in and as we were having breakfast, we were looking at livestock insurance clip, and some of you might have been thinking we're launching, this is a livestock insurance company. We are, and I would like to point out the fact that this is a major product we launched last year in the ASAL counties. Major step in covering the animal wealth of Kenya. You might want to know that the top 6 livestock counties in Kenya, out of the 14 ASAL counties, have animal wealth of 161 billion. Animal wealth of 161 billion. Those 6 counties are Mandera, Wajir, Garissa, Tana River, Isiolo, Marsabit. Those 6 alone, 160 billion worth of animal value. Generally, the livestock sector contributes 13.5% of GDP. The insurance sector contributes 3.16. The CEO of ACI is here. I hope I am not being unfair to the numbers. So you can imagine the value of the livestock sector in Kenya. In a recent presentation I attended by the ministry, we were informed that they spend 1% of budget on livestock. So 1% of budget going into a sector that gives 13%, 13.5% of GDP. You can imagine the mismatch. So this is an area that the government, the county governments, the national government, the Association of Kenya Insurers and the regulator are looking at very keenly. And we are one of the pioneers to start off. You could say partly because I am the CEO of Takaful and I'm a harder by trade. So that could be part of the early interest in livestock insurance. What we are doing is an index-based livestock insurance. So that product was launched in August last year in Wajir as a pilot. It was also launched in Marsabit and the Isiolo counties. And in August this year, we'll be launching Mandera, Garissa, Turkana as part of the growth of that product. We're also launching the medical product this year. It has been the most persistent question that we have received since we were licensed in 2011 when we will start medical. We have taken our sweet time to study, understand that product, and we are very close to launching that. We're putting together the systems, the team, the service points, the partnership with the service providers, doctors, clinics, specialists, all those people who provide medical services. So that's upcoming. We are working on a number of micro Takaful products that will be launched this year, mobile systems based, from personal accident to pension schemes. And that we are also going to do it on the mobile based systems or internet based systems, which is very close. As part of our launch of the family Takaful license, and in addition to working with our banking partners and who are well represented here, and I'm very happy that the bank has found time to come and listen to us, we will be launching this year long-term educational plans. We'll also be launching family savings under the family Takaful license. Absent from there is the pension product. Is a strategic product for growth this year. And you all know that we have in the house the chairman of the of NSSF, Mr. Aden Dawood. And you know that at the end of this month, the act is coming, am I right? At the end of this month? I think 1st June or 1st July, I'm not sure, 1st June. The new act is coming into force. And that act requires every Kenyan to, by law, to cede 12% as pension from their income. And we are in line to support companies and operations, especially those, let me point out those companies that are run by members of the Muslim community who are not part of the pension scheme. Generally, the rest of our Kenyan society has been fairly awake to financial services such as pension and so on.
Today, we are again looking back to take stock at our business for the past now 3 years. And I think we should commend the board of directors and the management of Takaful for having really exercised prudent risk management. And we are looking at very impressive growth figures. Takaful Insurance is a unique model. I don't think any of you was able to really understand the yellow, very difficult arrows running from one side to the other. I have been studying it for 3 years. I haven't understood it, actually. But when you remove that detailed technical presentation, it's fairly simple to say that an insurance company and a conventional insurance company is a risk transfer. It's just part of the story. Takaful is an insurance company, which means they cover your risks. We cover the risks. So if you want to get insurance, you can come to us and we'll give you an insurance product that really looks like any conventional product. The only difference is how we do it. We are very transparent about how we do it. The shareholders of the company don't give you their money. Those people who cover you are your colleagues who are also contributing to the risk fund. This is true also for conventional insurance, really. But for us, because of the system we work under, which is the Shariah concept also, we have to be really transparent about it and tell you exactly what's happening. And, put every income where it's supposed to be, very openly. Takaful is actually part of the Islamic financial ecosystem. This is one of the few ideas that the local people who are really developing this concept, Bashir and the technocrat together with him, actually thought about it, actually developed it, discussed it, and came up with it. It's one of the few ideas that are actually made in Kenya. Certainly, it's one of the very few ideas that have not come from the Western side. He discussed about AOFI and IFRS. We have been taught from the West, definitely, for the past 500 years, I should say, how to make money, how to do business, and even how to count our money. So AOFI is now a slightly different way of counting money that is not exactly the same as IFRS, you see? And we have to do that as an Islamic insurance company. Islamic banks have started, I think, for a number of years now. Before that, we have had windows really to recruit those people who are a bit sensitive about how they do business and want to do business according to their faith. So we have had some windows which started. Later on, we have had fully fledged Islamic banks, which actually conform genuinely to the principles. But the financial ecosystem for Islamic financial instruments is still underdeveloped in this country. We have got certain, let's say, breaks. We must admit and thank the regulators for being sensitive to this. But unfortunately, we are not seeing them going all the way to make sure that the ecosystem is properly expanded. So we still have some restrictions in terms of what we can do. The additional licenses acquired by Takaful really work as blocks that will complete, at least to some extent, the financial ecosystem. Now, we have got a very important new development, that is the family Takaful. I don't know how Islamic banks have been insuring their loans and mortgages, because that's one of the things that banks normally do. And I don't know if they're doing it at all, but if they are doing it in the conventional way, of course it's wrong. And now we have got a product for insuring, those kind of lending that banks do. The group of things, the spectrum of things that we normally call bank assurance, including mortgage protection and those kind of things. We are now ready to take that business. And I think by definition of the business we do, all Islamic banks, or those banks that claim to be doing Islamic products, I think by necessity must insure with us, because there's no other way of doing it. There's no alternative. All the other systems are not Islamic, and therefore you can't claim to be given an Islamic product and not insuring it in the right way, by necessity. Until we get the next Islamic insurance company that will compete with us, then you can divide the business between us. But right now, you must give us all that business, right? So this is very important to note. I think the other important thing that the CEO discussed is regional expansion, because we are looking at this region and we are looking at a very big exclusion for financial products and insurance. And we are looking, it's very important for us to really fill this gap, because people need insurance. Is a very old industry. It's a very important industry. One of the main drivers of the economy really is when you feel that you can manage risk. If you feel that you cannot manage risk, you will have a real serious block. You can't even move, because how can you do certain things, you know? And in business, you know, risk is always there, and it's very important. In fact, the word risk comes from the Arabic word rizq, which is something to eat. It's the same thing. So you have to do business, you must take risk. And if you must take risk, you would want to cover at least something. Otherwise, you cannot move forward. You have that, you know, really serious block. And there is a very large population of Muslims in this country who really manage their business in very low key, simply because they cannot take bigger risks. Taking risk does not mean being irresponsible. You have to be, of course, prudent, all right? And that's why people buy insurance. It's part of the prudential, you know, steps that you take to cover yourself. So there is a very big gap, and we are trying to fill it, and we will continue.